next speaker, our final speaker of the morning, is the chairman and chief executive officer of Street Beverages Company. They're actually providing drinks for lunch today, so we'll get to sample them. Please welcome Terry Donnelly to the stage.
Good morning. How are you guys? Drinks for everybody, absolutely. Just before we get started, I'd like to just ask a question. I need to put on my glasses so I can see what I'm doing. So who can tell me what Latakia is? Anybody know what Cavendish is? What about Burley? Corojo? These are the top 4 strains that make up Marlborough. Who knows what Hallertauer Mittelfrüh is? Tettnang? Anybody know what Spalt is? Spalt? What about Saz? Nobody knows what Saz is? These are the 4 noble hops that actually produce about 85% of the beer in the world. So I'd like to talk to you about branding. So first of all, a little info on who Hill Street is. We went public in July, and this is what our profile has looked like to date. This is our brand. We believe that October 2019 will be a watershed moment in the evolution of the cannabis industry with the expected legalization of infused edibles. We also believe that adult format beverages are the best delivery system for building brands and delivering consumer experiences that take advantage of the kinds of products that we've been consuming for thousands of years in order to get the social lubricant that we enjoy in social occasions. First of all, the number of reasons why this is the best format is it automatically deselects minors. None of my children who are in their early 20s ever once went into my wine cellar and cracked open a bottle of Cabernet Sauvignon thinking it was grape juice. Right now, the #1 platform for beverages, for social experiences, is beer. It's roughly 50% of the revenue of the alcohol industry, but it represents about 80% of the transactions in the beverage sector. The #2 is wine, and #3 is cocktails. And it's about $13 billion for beer, about $9 billion for wine, and about $4 billion for cocktails. So our strategy is to go after beer, wine, and then cocktails. We already have our products available in about 7,000 stores across Canada in the non-alcoholic wine and beer sector. The technology that we licensed from our good friends at Lexaria, who are sitting right here in the audience, mimics the onset and duration of alcohol. It also renders cannabis an odorless and tasteless ingredient, which we can then put into our beverages, whatever they may be, and allows the beverage to be the beverage, not to be some delivery system for cannabis. In the big alcohol space, they're extremely worried. I don't know if you saw what happened with AB InBev, but in their last annual report, their main macro brands lost 12.5% market share over the last 5 years. They lost that market share to mostly craft beer, to craft breweries, people who are creating unique beverage experiences based on great taste. And these are products that are premium. On average, they sell for 2 to 3 times the price of a regular macro beer, and at retail, you're looking at about a 40 to 60% premium relative. The second thing is that in this particular sector, because of the branding prohibition that is applied to cannabis, we believe that the playbook for big alcohol is gone. You can't advertise a cannabis product on the Super Bowl, and that's the playbook that they know how to run. So they have to be smarter, they have to be more nimble, they have to be guerrilla, and as a small craft artisanal beverage producer, we are all of those things. The final thing is that there's an opportunity to really create taste and relevance for a whole new category of consumers to the cannabis industry. Those who smoke will continue to smoke. Those who don't smoke are not about to start, right? We've been told for 50 years that smoking is bad for you, and any kind of smoking is still bad for you, right? But when you actually remove the alcohol, beverages become a far more healthier, a far safer alternative to alcohol. When you look at who the big players are that have done deals to create beverage platforms, you'll see that they are the most respected and most highly valued cannabis companies in the business. There's about 66, 67 corporations now that own all of the licenses in Canada. Maybe 7 of them actually have a defined beverage strategy. So they are typically the most highly valued cannabis companies in the marketplace. So what do we have? Well, we've got a fantastic executive team. We have about 100 years of beverage industry experience on our team from the biggest brand names in the beverage sector. We have a secret weapon, which is our relationship with causes who are researching cures and therapies into conditions that are largely caused or complicated by alcohol, and where cannabis is a therapy or treatment. These are exclusive marketing partnerships whose audiences represent tens of millions of Canadians who are seeking information and advice on how to live with whatever condition those people happen to be afflicted with. There's about 44% of the Canadian population who suffer from a condition that is contraindicated to the consumption of alcohol. These are people who likely used to drink but can no longer. So they are looking for alternatives, and cannabis is contraindicated in almost none of those conditions, and in fact represents a therapy or treatment. So we look to be recommended by those trusted advisors who are telling consumers which product to drink when it comes to living the lifestyle that they want to live. We have our partnership with Lexaria, which has been a terrific partnership. They actually just launched a new product called Charge Plus, which is a CBD-based product. You put it in water, and it tastes like water. So it's a great example of what's possible when you look at the beverage platforms that we are building. And then finally, we actually just announced, as of last week, this number has increased to about 7,000 stores that are addressable by our distribution systems. We have massive increase of distribution at Loblaws and Sobeys as well. We've gone in the last 18 months from this much shelf space in the non-alcoholic sector to about this much shelf space and double that at Loblaws, because we also produce the President's Choice non-alcoholic wine products. So when we set out to build the business after we went public, we said that there would be a number of items that we would consider key milestones. And so I wanted to give you an update on what we've been doing since we raised the capital that we did. First, we're still looking at the build-buy decision on beer-making capacity. That's one of the pieces that we currently co-pack externally, and that's a decision that we expect to be able to announce imminently. We have quite a number of new partners in the Canadian health associations. We believe this gives us an additional 10 million eyeballs a year that will be coming in on top of what we currently have. We announced our Quebec distribution deal that gets us access to the 3,000 independent dépanneurs across the Quebec marketplace. We announced the update last week on retail banners and points of presence that we've added. We also announced last week that we've sold in excess of 1 million bottles of our wine. So when people ask you if our products will be accepted by consumers, I think our 1 million bottles says absolutely yes, they are being accepted by consumers. And the retailers are not only taking them in, but they're expanding the shelf space and building their private label programs on our brands. We expect to be able to demonstrate this month our proof of concept for dealcoholizing and infusing in one single process. That allows us to basically have a machine in our facility that is where all of the cannabis integration into the beverage system will take place. We expect to announce our license sometime in March or April with a cannabis partnership from a supply standpoint as we move forward to be able to produce beverages in time for the legalization framework, which we still expect to be somewhere in October of 2019. So when you look at the valuation of Canadian cannabis companies relative to where we sit, I think we represent a very good value, comparatively speaking. We are an existing business with revenues that are growing, and our quarter-on-quarter growth over the last 12 months has been probably around 50% revenue growth on a quarterly basis. When you do a comparable base of us relative to the rest of the marketplace, we're a relatively new entrant into the publicly traded space, having been listed only a few months ago. And certainly I think our multiples stack up quite nicely as an investor. So in summary, we're looking at, the end of cannabis prohibition is a once-in-a-lifetime event. There probably won't be any other product coming out of illegal status into legal that represents as big an opportunity as cannabis does. And we believe that alcohol-free beverages are the ideal host because they're the shortest journey for consumers to make from drinking a beer with alcohol to drinking a beer with cannabis. Drinking a wine with alcohol, drinking a wine with cannabis, drinking a cocktail with alcohol, drinking a cocktail with cannabis. We have an award-winning portfolio. We've actually won 4 world championships for our product. 3 world championships for our craft lager and 1 for our Cabernet Sauvignon. That demonstrates in both categories we know how to recipe taste profiles that will get acceptance from consumers and also from the critics, which is extremely important in terms of influencing consumers. And then finally, we have our infusion technology ready to go. We have extremely deep management strength on both our board and our executive team. Our board includes Paul Rosen, who's probably the godfather of the Canadian cannabis industry, Craig Binkley, who was a chief marketing officer at Coca-Cola and president of Minute Maid USA, and I think a very, very strong and well-diverse management team and board. And we have significant ownership by the insiders. About 38% of the company is owned by insiders. We have very significant capacity to build out. Our current facility in St. Catharines is capable of producing between 40 and 45 million bottles of wine a year. When you actually look at what that would represent from a volume standpoint, if we were to be operating at full capacity with the average price point of about $18 a bottle, we would be the 2nd largest wine company in Canada. So it gives you a sense of what the capacity is. We have the ability to co-pack. We already do that. So we believe we're not just building our own brands, we're building a category. And then we believe that we will have a proof of concept infusion ability to produce as soon as we're legally able to do so. And then finally, we believe we're well below the median market cap of Canadian cannabis stocks, and we're a pure play in cannabis infusion. You can sort of look at us as a beverage company that represents a single view on the cannabis beverage space. Again, very strong management team. Doug Taylor's experience, he was the head of sales at Microsoft, worked at Coca-Cola and Unilever. David Pilara, who's actually over here, was at Google. Prior to that was at Coca-Cola and Starbucks. Hinta Chambers, who's our CFO, managed a $1 billion business within Nortel, the public entity. And then Craig and Paul and Kevin, representing very deep experience in cannabis and beverages. And that's our story. Don't forget to come on over for a sample of our product. As I said, the cannabis infusion for us is odorless and tasteless. So the product that you're tasting today is exactly what it would taste like if we were able to infuse it with cannabis at this point in time.